Joining the conversation right now is the head of private equity portfolio operations at the Blackstone Group, Dave Calhoun. Yeah. Dave, good to see you. Thanks so much for joining us. Yeah. Talk about what you're doing in terms of private equity and how you're allocating capital right now. Really an interesting sector.
It is a popular sector, and I think it's popular for very sound reasons. That as an operator, in the life of an operator, having a single share owner with a long view, it may be illiquid. If you're an investor, you may think about it that way. On the other hand, the opportunity to create value inside that company is it's significantly greater. And I think institutional money is understanding that more and more and more, and beginning to characterize us as a, yes, illiquid, but much higher return. And it's, for me, I just don't think this train ends. I just think it keeps rolling.
And Bob, you deal with small and mid-cap companies all the time. That's where the job creation is.
It really is. As Dave, good to see you, my friend.
Nice to see you,
Congratulations on all you're doing there.
Yeah.
But yeah, I think exactly what Dave said, these mid-caps, small caps, we're seeing some in traditional business, landing gear business. We're seeing some high-tech energy stuff. But, you know, Dave, the one thing I wanted to ask you is, private equity gets a broad brush of negativity about eliminating jobs, but you and I both know over the course of many years you have saved thousands of jobs and helped companies survive through some downturns by infusing growth capital and so forth. Tell us about your view on that.
Yeah, saved and added. We're investors. The private equity world they are investors at nature. They want to put more in. They don't want to take it out. And so when we go into a company, we're always thinking about how we sort of improve it, move it into the modern times. My personal experience with the Nielsen company under private equity ownership, we basically had a challenge of moving from an analog measurement world to a digital one.
Yeah.
It took some time, it took some patience, it took lots of money, and it's a much bigger, improved company with more jobs and exciting skills to bring to bear on that company. So, and that's what we do in every one of our companies. It is an offensive play. It is not a defensive play. And that old adage about taking out and skinnying down, and so I've never seen that, you know. So I hope the world's beginning to understand.
Well, that's the thing. I mean, look, Steve Schwarzman, CEO of Blackstone, has been on this program to basically say we're not in to buy a company and then fire everybody, flip it, change it, and then take it public and then get out. You guys are in companies for the long term.
Yeah, we really are, and that's extending and extending. So. Personally, I'd like to keep them forever. You know, in almost all of these companies that we're in and we're operating, we continue to see improvement opportunities. We like to make those investments. And when the public markets get a little shaky, almost all the competitors we face run. In other words, they start to skiddy down because they have to. That quarter matters so much to them. We can plow right through it and invest through it.
Yeah. We run an early stage venture fund, and we're seeing some very great opportunities in startup companies, but I don't mind announcing we don't have $100 billion in AUM. Yeah. Can you look at startup companies? Can you get in at an early stage if you see some amazing technology?
We can.
That's a good question.
We can, and I suspect as we move forward, technologies, 3D printing, robotics, all those things that are now being sort of built in startup fashion, small entrepreneurs doing what they're doing. Our job is actually to get involved in those early, think about them more in terms of growth capital, but most importantly, bring what they do to this other big portfolio of companies that we have and bring it aggressively to bear on those companies. Yeah. And that's when we can build markets and we can build value.
So what I want to know is we talk every morning about, you know, a lack of growth in the economy, that we're sort of in this slow crawl right now. You're seeing everything. I know you did a deal on energy recently. I know you're involved in industrials. Tell us from your standpoint, where is the growth in the economy right now? Well, you mentioned 3D technology.
Yeah, but it is a slow growth economy.
Okay.
I would love for all the policymakers to sort of get on the growth bandwagon. I don't see that in all the debates today. But I have never been more optimistic about what technology will do for industry in general. Synchronizing things that are not synchronized today. The productivity opportunities are huge. They're huge. And it's mostly built around data analytics and what it does for all forms of industry, both those that serve consumers and all the business interest and industrial interest.
Yeah,
all of them benefit from data analytics.
So data analytics, so you're talking about cloud businesses, you're talking about organizing data, mining it.
Organizing, using data, and then synchronizing your relationship with your customer in ways that others can't. And it's a race to do that. But that creates productivity, lower cost ways to serve, better ways to understand demand. Yeah. It's really fascinating, but I have never seen it. I've never been more optimistic about it.
Yeah, I think the big thing here, Dave, too, is technology is really supporting productivity improvements, as you say. Technology as an industry is not creating the same amount of jobs that it might be displacing. So that's to your point where we need to get an administration that's going to support a 3.5% GDP, not talk about it, but have the underpinning for it.
Absolutely. There has to be, I mean, education, training, all the different ways that you can train people in the workforce to do these different kinds of roles, these different kinds of jobs. We should be doubling down on that. And there should be a soft landing for those who can't make that transition.
So how long of a runway does tax reform give you? Let's talk about this idea of a 15% corporate tax rate and small business seeing regulation unwind, because isn't that the two big hammers on these companies?
It's real. You feel it every day. It's not getting any better. It's difficult to articulate each little item that sort of gets in your way, but it is slowing everybody down, and it's difficult.
The bureaucracy and the regulation.
It's an amazing bureaucracy.
So if we cut through the red tape, we'd see even more amazing companies started and funded.
Absolutely. No, there's just no doubt in my mind. I just look at governance in general it just slows down everything about a company's performance, both in the public and, in some cases, in the private markets. It's just not helpful.
So you do think then lower taxes on the corporate side and an unwinding of some of these rules. I mean, Obama put in how many new rules in just this year? It's 6,000 pages of new rules. You think that's going to unleash new economic growth?
There's no doubt in my mind. A comprehensive tax reform is the opportunity right in front of us. It's on the table, and we need to solve for it as soon as possible.
Yeah, as I said earlier, let's not criticize Ford. I mean, they're doing what they have to do to compete globally, right? Big car demands are up, so they're realigning their production facilities. Fix the corporate tax rate so companies can compete globally, Dave. You saw it all the time in our careers.
Yeah, Bob and I, we've had the battles. When you're operating a company, you are simply focused on beating the other guy. And if the other guy is from somewhere else and they've got advantages, you have to take them on.
And Maria, to your point, I think both of these guys have experience, boots on the ground doing this. So taking advice from someone like these gentlemen would be very helpful to whoever is in charge of the country.
For sure. And not only that, but you must be seeing more interest in private equity as hedge funds fall back, right? A lot of people are cutting their exposure to hedge funds because these hedge funds are not performing, and they're adding more money to private equity.
Yeah, there's no doubt. And it's hedge funds are a bit of a derivative of the public markets, and it's a sort of a, you know, my novice view is that it's a math game against the public markets. We are in a very different world. We are there to fund and build companies from the start, and we hold on to them for long periods of time.
Really? Yeah, as Dave said, in some cases they've got to get out. They've got tripwires in there, so when it reaches a certain point, they got to sell, and that's the opportunity for us to jump in and take these companies over.
No question.
Would you say right now is a period that you're selling more or investing more?
I think we're taking advantage of what we think is a very high-priced market. Yeah, that's another opportunity that we have to, if we see markets that we think are very highly valued, and we have companies where we've seen most of the operating improvements, we should begin to liquidate, and that's what we do.
Good time for an exit strategy.
Yeah.